Are you recording? I know sometimes. Oh, there we go.
You know what? I found out that the video is actually better when I just download it off of YouTube after. So that's what I've been doing now. So I don't even need it anymore.
Nice. All right. So
Okay. Looks like we're live on my end.
I think we are live. I'm taking off the blur, so we're doing maximum. Yeah, here we are, live from London today.
London. Never been there, but seems like a beautiful city. I'm wondering if maybe we should like stall a minute or two in the beginning to see if people enter before we even begin. What do you think? Or do you just want to roll right into our topic?
I mean, we can just like wait a second. I mean, I don't know. Like, it's not like we're gonna like watch in. Yeah, I don't mind. Just launching in.
Yeah.
It's fine if people come a little late. They come a little late. That's totally fine.
Yep. And we're going to give the people what they want because Tesla always does well when we talk about it. That we know there's a lot of Tesla shareholders that watch this and are shorts. So you went really deep into Tesla stock as a whole and you wrote about it in your newsletter. And we just want to cover that to begin.
Yeah, it's really interesting, and I'm gonna just check. I know like it's not necessarily good to screen share, and you can do it later, but I did want to just check one more time and get like the most up to date upside breakout and net option sentiment. Because basically what we saw last week was really interesting, and we talked about it. Where yeah, it's the same kind of trend where we talked about it in our newsletter, which is basically like we saw after the deliveries hit, like the big delivery news over this past weekend, um, that essentially the bets move from like the short-term options markets to the long-term options markets. And we've seen that a few times, but it's so interesting because we literally picked up this movement. Net option sentiment kind of plummeted. And, upside breakout, which is as low as 67 last week, over the course of the week, made it all the way up to 100 to the top of our scale as net option sentiment moved down from 100 to 75. So basically, that is us just like literally picking up these institutions moving their bets from the short term to the long term options markets. And to give you an idea of why exactly they do that, it's that, when you have something like all of these positive deliveries coming, the institutions either like, have some direct kind of inside knowledge that things are going better, or just have a better idea of exactly how these orders might go, the local markets, everything like that, where they just are like have more time to research this stuff. They know that the market is going to react positively to those deliveries. So you load up on short-term options. And the simple way to explain this as the shorter term the option you buy, the more and higher it will go up when the stock moves. So that's why if you buy like a 0-day or 1-day option, if the stock moves a lot, especially if it's an out of the money option and it moves in the money, which basically just means like if the S&P 500 is at like at 400 and you have a 0-day option at 401, right? And it clears that, it's going to like rapidly intensify in value over the course as it's going that. And that's like the example of you using the shortest expiration. So obviously, if you're an institutional investor and you expect Tesla to beat their deliveries, and you're very sure about that, you want to load up on as many short-term options versus long-term options as you can. Now, the reason you upside breakout would start going up and you'd start seeing that kind of shift from short-term to long-term options is actually exactly what I said about it in the newsletter already is proven true, which is that you're going to get a lot of people like basically selling after the news. There's an old expression on Wall Street that's buy on the rumor, sell on the news. So basically, like after the news of the deliveries, you might expect people trading that to then sell out of it, which is why you'd say, okay, I don't want these short-term options bets anymore. I want to clear out of them. I want to sell them, and I'm going to convert to long-term because I don't want to miss the growth story for Tesla. And that's one of the other things we said in the newsletter this week, that increasingly the kind of behavior that I'm seeing is people that are just buying growth stocks. They're performing great because they're just like, well, maybe we haven't hit the bottom, but I don't want a chance, Tesla's moved already 156% year to date. And so they're just like, I don't want to miss out on the next Tesla because, yeah, the market might go down 10% before it goes up, 150 or more. Like we talk about, like we're going to talk about one stock today that I think could 10x, and we talked about that. And so it's just like, yeah, I'm not going to miss, like, yeah, it might go down 10, 20, even 30% if there's like, if economic news is worse than we thought. But like, I don't want to miss the 1,000% gain because I'm worrying too much about, did I get the exact bottom of the market or the temporary bottom? So I think that's what we're seeing with Tesla, and why everybody's like, it literally went from 67 upside breakout all the way to the top. It unseated Meta, which we're also going to talk about. It unseated Meta as the top upside breakout stock. So that's a huge move, and it just shows, you can like look at the newsletter. I'm sure it's going to get pulled into this on when it gets cut up for TikTok. But yeah, like that just happens because like that's exactly why the Prospero signals were built. And like, as well as they're doing in trading is great. But that's not the reason they were actually built as trading signals. The reason they were built was to report accurately on where institutions were making their options bets. And it's just like an advertisement for there, right there, when you can see like exactly those bets being transferred from the short term to the long term on something that really makes sense for them to do. You understand exactly why the deliveries were beat. There's going to be a bit of a hit on the like selling the news thing, but them beating those deliveries basically just means that like the long-term growth story just got a lot stronger. And you're basically going to have everybody, buying those long-term options. And upside breakout and downside breakout, those use expirations that are greater than 270 days. So anyone buying things for upside breakout, like they're in it pretty long haul on Tesla now. So that should tell you everything. And that's why I even said in the newsletter, like, yeah, I wouldn't be surprised to see Tesla take a 20% hit. And if you're a day trader, and you want to risk that, I wouldn't be surprised to see Tesla take a 20% hit in the next few weeks, or even this week. It could even happen, which wouldn't be great for the newsletter pick, but I took a chance on it. Because basically, like, I'm in that boat. I'm probably going to keep Tesla as a newsletter pick for the next year. Like, unless I see, as I said, some strong movement in both net option sentiment and upside breakout downwards, I'm probably just going to let it ride, keep it in the newsletter, because that's seemingly what the institutions are doing. And that's kind of our whole strategy. We watch what institutions are doing, we see where those signals are, and we make sure to, kind of replicate that.
Yeah, so it seemed like what you're really getting after is time in the market versus timing the market, which is the old saying that a lot of people on Wall Street also say, and that you just see bullish news for Tesla for 6, 12 months plus. So there's no reason to be in and out, worrying about the bottom, worrying about a dip. So you'd buy on any dip for the most part.
Probably. Mm-hmm. And that's like the Tesla options that I just like have been raking it in on. I actually had an opportunity to buy more of the same contract when I first got in. When I reported in the newsletter, I bought, and I actually had the opportunity to buy more of that same contract at about a 30% discount. And like, that's the amazing thing. And what I say, one other thing about the Prospero signals that helps me, even a very experienced trader, is like, normally I didn't have the guts. If I saw like, and it was about like a 5% decline on the day that I bought more in Tesla stock. But like, I saw net option sentiment like holding strong where it was, upside breakout holding strong where it was. And I was just like, this seems like a discount to me. And I bought more, and I like, I probably made an additional 50% on the trade just by buying. I think it was like 25% of my option position about. I just loaded up more. And that's the really nice thing. Like I said, if I ever see that happening where the stock is going down and our signals are staying solid and in the zones where I would still be bullish, I don't mind. I don't hesitate. And actually, a lot of what we made money on in our trades last year was just doing that with the QQQ. Basically, if I saw either like net option sentiment going down and QQQ going up, buy puts, and reverse was going down, and I saw net option sentiment on the QQQ going up, just buy them. That was probably like 60 or 70% of our profit last year was just that simple of a
Mhm.
strategy.
Fantastic. And I know you've been busy on your London trip, but I don't know. Elon's kind of going off on Twitter. I don't think he's too happy about this whole Meta Threads new launch. So I think
No,
we've talked about Elon on Twitter before. It's kind of just all news for Tesla, right?
I think it's kind of funny. I mean, yeah, like Tesla got hit because they were worried about like his overall financial position. But I think like, and maybe like, I don't even particularly understand why that happened, but I think maybe they thought it was going to be a distraction and maybe Tesla wasn't going to be as good, but Tesla's firing on all cylinders, even if Twitter is not. But it's like one of those things where just like, you might be able to move your stock, like you might be able to manipulate some cryptocurrencies when you run your mouth, Elon. But this one, I I I'm not gonna say Zuckerberg didn't do this threads thing to stick it to him. Like I think it's probably just as likely that he did to stick it to him as it was just a business decision. So yeah, I think this is probably one where like, and it's doing great for people that don't know, like 100 million users right away. And obviously part of that is they make it really easy with Instagram. And like it's the nice thing is like people that have Instagram audiences can basically like instantly convert really smart the way they did that. Like you can just instantly like auto follow everyone on Instagram and they'll probably auto follow you back when they get to threads. So like, yeah, instead of having to build a whole other audience to like write this kind of short form, different kind of content. Yeah, it's funny. He called like you're getting to him when he called Zuckerberg a cuck, where you're
Yeah,
just like, okay,
it's
like
personal.
you're really reaching in. It's like pretty immature, like even for him, where it's just like, come on, you gotta know, like, even if that's true, it's not gonna land like you sound like like some
Well,
weird guy that calls himself an alpha male.
he didn't stop
Like,
there. He went further. I don't even think we want to mention the other thing he said, but people could go check it out. He went a step further past that as well.
oh wow, yeah. Not for our, we'll keep it cleaner than that here.
Yeah.
But yeah, it's just like, dude, sometimes like, I mean, I think that is honestly like I used to be a big fan of Elon Musk. Like just because like I love innovation.
Mhm.
Like anyone that innovates, anyone that's like pushing humanity forward, like, I'm for. But he really lost me. And like, here's the thing, like I don't land like I hate the polarization of like almost everything. And like so like on COVID, like where I land is in the middle, like on most things, where it's like both sides exaggerate, the truth are somewhere in the middle. But he really pissed me off when like he like threw the whole public tantrum and moved his factory and like and his workers were like getting COVID and he was like kind of making them like go back into the office before anyone else or at the factories or like whatever. It was just like I would even say like even handling it just that way would probably be more acceptable, but he just has to make such a spectacle out of everything where it's just like an adult man like whining and complaining and threatening like the government of California and like making a big thing. It's just like just go to Texas. If you want to go to Texas, don't do that. You don't have to throw a public like a public tantrum about the state of California and try and like bitch at them or whatever. Like you know, just be more of an adult, basically, is where he starts. And I still think he's really sharp, and I would bet on almost any one of his companies, even Twitter. Like long term, maybe not like, I wouldn't say it has quite the upside, but I would never count him out.
Mhm.
Um, and like, the new CEO, she seems really sharp with like ads. So like even if like they lose users, which I'd say almost they undoubtedly will, like they might be a more profitable enterprise and might be much higher revenues. I could easily see that. And yeah, the stuff like I know quite a few people that scrape Twitter. And for all the people like complaining about rate limits, he's right. Like that was a sieve. But also like I approached like Twitter at one point to get like a corporate license, and it was just like $50,000 a month to
Oh my
like get the data I wanted. So like I think they need to like come a little down
Mhm.
on that one.
It's not a Bloomberg
Uh,
pickup.
the funniest was like, honestly, the only thing worse than that, I'm always trying to like, look to buy data, get as much data as I can. And like, yeah, the funny part was when I approached Yelp at one point, because I was actually looking at a real estate project. Um, they were just like, sorry, we don't sell our data. I was like, you are the only ones, you're taking like the moral high ground, like you're a company, right? Like it's just hilarious. Like I can understand if like the moral, like, believe me, I'm all on board with like you don't want to sell to Goldman Sachs. Like, sure, whatever. Like, or some other institution that's like you're just like, well, we don't support like the way you do these financial institutions. Like, that's one thing. But like to not sell to any corporates or like any or even me that's like, hey, I'm building a little real estate model. Like, what would be the way to like grab some of your data? Like those are the two worst data policies I've encountered. So I hope they get smarter about that too. And like that would be like that would be a lot better, I think.
Yeah. So spinning from more of the Tesla Twitter side to the Meta side, everybody's talking about, and it's definitely true that Threads is stealing users and activity from Twitter. But I'm actually really curious about how much activity it's stealing from Instagram as well. Because I've definitely noticed personally myself the past couple of days, I've been on Threads, and obviously there's an opportunity there because it's a brand new platform. People are going to go heavy right in the beginning. But I'm not sure if, well, you'll give your opinion, but is Meta like spinning up new business or kind of just shifting from Instagram to Threads? And how do you feel about that? Is it really bullish for Meta? Just overall.
Yeah, I think it's like they're gonna get some more users from Twitter. Like that, and they might even get they might even get people that like don't like Twitter. There's a lot of people that don't like Twitter for like political reasons. Um, that might be very happy to go on Threads. So they might even like steal users from Twitter and get new ones. Like, yeah, they might have less activity on Instagram, but like in terms of their bottom line, not likely, like much more likely to increase it. But one thing I am interested in is like a lot of people have started to say that they don't like Instagram because there's just like too many ads. And so that is the thing that remains to be seen if they're going to like try different monetization for this, that like maybe they lose some people to Instagram, but they don't monetize it as heavily. That would be an interesting thing. But in terms of raw dollars, I can't see it not increasing their like sales and profitability. And like just like some things, it's sometimes what people don't actually understand about the stock market is that when your stock price goes up and your company gets more valuable, you raise capital, you get, whether it's issuing new shares or debt offerings or whatever, capital becomes cheaper to raise. So like even just the cycle of the belief that it's a more valuable business, like creating a better capital raising environment for them allows them to pursue more R&D. So even just the perception that it's a more valuable business, it's kind of like a virtuous cycle. And like the one thing is, like if you look at the way Meta has been, obviously it did lose the top seat in upside breakout to Tesla. So it did have almost a 5-month run locked at 100 upside breakout, which like I've never seen. Like I haven't seen anything close to that. Most of our signals, within the week, you'll see different people, like different stocks on top of them cycling around. There's just a lot of movement in especially the options markets. But like, yeah, when like Meta actually was at 100 at one point, and I actually saw it as low as like the next highest stock was at 80. And like obviously, since we're scaled, that essentially means just like Meta is that much more bullish than any other stock. Its options are being priced higher, its price targets are like its call options are being priced that much higher than puts. Its price targets are that much higher than where it's trading. analysts are upgrading it, momentum factors look good on the technical side, like all of that, it is that much better than the next stock to have that much of a gap in the scale. So yeah, I know there was an interesting question there about like, can Prospero predict something like threats? Like did it? Because obviously that's happening now, and I think it's getting close to up 70% since it cleared to 100 upside breakout. And so like, is that something we can predict? Yes and no. It's a yes in terms of like, yeah, like analysts have a lot of insights. They talk to the company, they figure out like, new business units, what they're thinking, like, hey, we're thinking about launching threads, like there might be more rumors, like even if that's not that's something that's being like officially shared, like we all have personal networks. And like, even if you're not officially supposed to do that, like a lot of analysts might hear through a friend of a friend that we started, like the engineers started to work on threads, analysts, hedge fund analysts, yeah, they might start to talk about it. They might get wind of this and they might make options bets based on that. In fact, it's like more likely than not that the people making those massive options bets on upside breakout and net option sentiment. So short and long term, like I've written about it like a lot lately, but there was 1 week, 2 weeks ago where Meta was 100 upside breakout and 100 net option sentiment, which I also have never seen. And it just basically means like, and this actually works well in kind of some of the other things that we talked about with Tesla, where it's just like most of the time, like there aren't so many options bets placed on a stock that like it's going to be the most bullish in the short term and long term options markets. But that shows just how bullish the market has been on Meta. And you have to think that that has a lot to do with something like a new product launch coming in. There was actually some news that broke along the way about, some of their, AI plays seeing good early results and like the type of AI plays they were going to have. But like, yeah, we've been all over it, obviously. And that's the nice thing about Prospero. I don't have time. I used to be a buy side analyst. But like, even if I had all day to run down that information on like all these companies to cover, like that's still just me. Like these places that like these massive hedge funds, like they have, one person covering a few companies and they're just like constantly gathering information on that and, making their options bets. And that's why we leverage that. We see where they're betting, people that have way more time and resources. And yeah, when you see that kind of clarity, especially like when we're talking about 100 net option sentiment and 100 upside breakout, like, yeah, like you can bet like that they knew there were things in the work, and this makes perfect sense that like you can't keep this under wraps, that you're working on it and that you're launched, even if it doesn't have a big story about it, like your engineers are talking, like, it gets around. And that's what literally like finance people get paid the big bucks to do, track down this information in one way or another before anyone else knows it. So yeah, like that's why we just say like, even as powerful as our AI signals are, and we talk about this, and even when someone asks me like, oh, hey, like we see this back testing like performing really well in this like automated like new AI company, and they all do the same thing, and it's really dumb because I'm just like, no, you can't beat Bridgewater, you can't beat Renaissance Technologies. Like those places have put like, they have like hundreds of people on their engineering teams. And like, if you're talking about Renaissance, like a 40-year head start on their AI tech, you honestly are telling me you can beat that? No, that's stupid. That's why a lot of our tech, like we have our own nonlinear equations, but a lot of our tech and our, advantage, our secret sauce is I've been building things to track those institutions for a long time. Like leverage, we're essentially leveraging their technology to find these answers and see where they're betting, because like we're seeing where all of them are: Renaissance, Bridgewater, Two Sigma, like some of those big names. Like Tower is another heavy quant fund if people want to look for the kinds of things. 0.72 Cubist. Those are the ones that I see if they're buying. I'm much more bullish. Like if I look at that and I look at their like major holders, major buyers, but like when we look at net option sentiment, like or upside breakout, we are looking for institutional signatures of those. That's where we've zeroed in a lot of our tech on. And just like making that more transparent, because there's the other aspect of it's just like when we pitch these, like when we pitch it in our newsletter, like even those we're talking about like 1 week hold times on those newsletter picks. And it's just like, if you're some upstart quant fund, like that's trying to high frequency trade with those guys, you're going to get beat. You're going to get toasted. Maybe not today, maybe not tomorrow, but like those algorithms, for people that don't know, like those algorithms are actually like, some of them are trying to sucker you in and will let you win the smaller ones. Like let some computers win the smaller ones so they can take the bigger pot, like the old poker trick where they're just like sucking these places in.
That's
So
so
yeah. And they hire psychologists to like work with their quants. Like, so yeah, like anyone that's like trying to be like a pure quant startup that is trying to be like, hey, look, we're really good, run as far away from them as possible. Like, unless they have an answer like I just gave, where it's just like, no, this is how we do it. I've worked for equity models for 10 years. And I started out trying to beat them and realizing that you can't. So slowly I just figured how to watch them instead. And nobody's saying that. Or they might start saying it because they see me talk about it. And it's not the first time our marketing has been stolen. But yeah, I always find that as a pretty funny aside when they're just like, oh yeah, invest in our quant fund startup. It's like, yeah, like you're going to beat these people with a fraction of the engineering team, a fraction of the data budget, a much smaller fraction of the time spent on these models. Like anything younger, any company younger than 2 years is just like, it is a joke that they're even trying to gather money.
It really enlightened me right there. I always knew exactly what Prospero did and like watching all these hedge funds in the markets, but I never fully got until you just went on that spiel about how you're able to basically get access to all of that like data and all of that resource and technology and decades of work that you just said like nobody could ever beat. You're like, why would I spend decades building it when I could just look at what they're doing today and kind of use it without even having to build it? That's really, really interesting. I never fully grasped that, I don't think.
Yeah, exactly. And by amalgamating all of their opinions, you can maybe even be better than any of them. I don't like, whatever. I do the best I can, but there's a funny story in high school of like, there was a take-home biology test and I was not that great on biology. But I did the take-home test with like 4 of my smartest friends, and I did better than all of them on the test. And they were all just like, what the hell? And it's just like, well, yeah, you like, if you're amalgamating a lot of smart opinions and like figuring out what like the source of truth is, what the smartest answer is from studying that, that is essentially the same thing that we're doing in the options markets. Instead of just like needing to have our algorithms try to beat them, which I should emphasize, anyone telling you that they can, they are, grifters at best. Like, maybe, well, no, sorry, they're stupid at best, grifters at worst. I was trying to figure out what's better, but like the stupid is probably then the active grifters.
Okay. Well, that was awesome. I did have a question on Meta, but somewhere in there, I think I lost it. I'm not sure. Maybe it'll come back to me before we move on from the single stock section. But we did want to talk about AMR a little bit. So, so if we want to hit on AMR.
Yeah, sorry, I'm realizing that it's getting a little dark in here. It is here.
Yeah, you got a good picture. It's getting hot in here.
Night. It's getting to be night in London. Which is just like it's a mind blow, especially the people I'm working with on the West Coast. Very difficult, these different hours. AMR, yeah, it's very interesting. AMR is looking, made a big move up in net option sentiment, and AMR is just like one of those where like I only really pay attention to it. It's a lower growth, higher profitability, very high profitability stock. And those I don't tend to love. I like, I talk about profitability plus growth all the time. But it's spiking up in net option sentiment. And anytime I've taken it for 2 or 3 good runs when I see that like move up in net option sentiment. So it might be a good time to look at AMR. Just especially because of like the next thing. I mean, we're going to talk about kind of like earnings soon. But yeah, like I could easily see this spike being something where they're just like, some news around them doing better, or like they're a very profitable company already. And yeah, like AMR is one that like, traditionally has good upside to downside breakout ratio, high profitability company. That's the kind of one that we really love in net option sentiment.
I remembered what I was going to say. I was going to say, you were talking about how impressive it was for Meta to hold the top spot for so long. I think Prospero should have some kind of like Spotify Wrapped at the end of the year, where we run through some of the biggest, best trades, or I don't know, some things. We could think of some stuff. It'd be interesting for sure. But yeah.
Definitely.
Um,
Yeah.
so last week we talked about biotech in depth, and we ended with talking about DNA. And I believe you had a little update you wanted to mention a week later about it.
Yeah. Let's see. Let's get the current. Let's get the current. Yeah, DNA up 10.51% today, and going. That was another one of our. We talk about it like that is just that was very simply me adding, like when I found ENVX and when I found this and I started working on my model portfolio, I just added growth and upside breakout. Not that complicated. And we start to do that in our bonus picks, actually, where I start to share some of those ratios that I look at. So if you're a subscriber to the 2X weekly and you use the trading signals, that's another, I think that one's like $10 a month, the bonus picks. That is, and anyone that watches the live stream, you can reach out to me. I'll give you a discount on either one of those if you're not there. Reward our loyal watchers.
They deserve it.
But yeah, I would say the main thing on DNA is like, yeah, it's got a very interesting, like there was a news story actually about like an Israeli food company using them, some of their like protein and cell programming technology. And that's like the Israelis are very tech forward. So if they're using a company in another country, they've got some legit stuff. And like, yeah, that's another one, just like a high in our growth, upside breakout to downside breakout, like looking pretty good. Like biotech, the thing is like profitability is always going to be lower. So they had a decent profitability plus growth, especially for biotech, over 100. And like one that we don't like, Galapagos, like GLPG, like it has a 15 profitability and 16 growth. To give you an idea of how bad, like a 31 profitability plus growth is like kind of as bad as you're going to get. Like it might not be the lowest, but it's very low. But yeah, it's charging today. And yeah, it kind of is, it kind of like goes along with like our growth story and the types of things that we're looking for that like, obviously over a month ago now, when we made our model portfolio, we did so because we're just like, hey, it's time to buy growth stocks, kind of what we were talking about in Tesla. We're just like, you know what, like this might not be the bottom in terms of rates. But it's definitely like growth stocks are I can kind of talk about this when we do the macro. I don't know if you want to lead in for that or if I should just like segue right into that, because it segues very nicely into it. So yeah, basically what we're seeing and what I talked about in the newsletter is essentially like, it is honestly really weird to like see like these rate hike bets increasing, and also for like the next 3 meetings, they've been going up. But that's kind of the difference between, when people are starting to bet on growth stocks and a growth market versus like profitability, right? And a lot of it was being driven by profitability stocks as the times are getting tougher, and growth stocks just get like hammered. but like part of it is like they get hammered a lot, but they're kind of like the first ones to start seeing big because people don't want to miss it out. Like, going back to DNA for a second, like the way we've talked about it and the way I was like, look, DNA could easily lose like 30-50% if it doesn't hit on some things, if we haven't hit the bottom. But like you risk that 30-50% because I could easily see it 10xing over the next year. And that's a nice thing because like you could get an options like return without having the expiration or the theta decay of basically like the time value. So yeah, I just think it's like pretty clear what we're seeing there. And I just think it's like, yeah, the market is just like, you know what? I don't care necessarily if the rates are going. We did also see another thing that I shared in the newsletter, and you could probably pull up the picture, is prices paid and a 6-month lag on CPI are tracking really well. And prices paid on services has been like going towards the bottom. And basically what that means, and it's like a quick decline, which basically what that means is like, it is, if you look at the graph, like it is tracking pretty closely 6 months ahead of CPI. So basically what that means is like, if this continues to hold, and Cubic Analytics, like someone that, a macro thing that I read. And like, by the way, like I say, do your own research all the time, but like, for someone like me or anyone, it's a good lesson. Like I like that macro analysis and I don't have time to do as much work as Caleb, who writes that, does. So like what I'll do is I'll basically like, read that and like I might dig more. Like that's the do your own research. Like when I saw this picture that basically showed like is predicting like pretty well that CPI will be down to 2%, by the end of the year. Like I'm just like, whoa, like I'm not the only one that sees this and it's tracking pretty close. So like to me, that's what we're seeing. Like even with these rate hikes, people are very bullish on inflation reduction, and in light of that, just being like, look, I don't want to miss the boat on these growth stocks. And that's why we did the model portfolio. And like we were just like, and the only reason I didn't have a model portfolio during the bear market is like I don't want to have to trade in and out of it all the time. I don't want to be like, oh, like is this the start of a 30% decline in a week or two, like, and then I have to like labor over like short-term market machinations of like selling all my growth stocks, maybe getting them at a like, because it might take so much longer for them to become profitable. If we're going to see, like at one point we were doing Nvidia trades and we got out of them and it was down like another 40% once we get out. Like we were doing a big chips thing around that bill, and like thank God we got out. But yeah, like that's a perfect example of just being like Nvidia took a big hit before this latest run. So like, yeah, it's definitely something where, you have to like, I had to believe that, that I could buy and hold these growth stocks and just be like, no, I'm just going to like go, and ENVX keeps going up another 5% today. And, to our loyal watchers, if anyone bought it the first time we mentioned it, even though it's like a 30%, 35 probably after today % gain in the model portfolio, it's a 55% gain from when it was mentioned here. So there's a lot of things you can get in earlier on. And I think both of those are still buys if you haven't bought them yet. You might want to wait for a dip, but that's what I'm just saying. Over the next year, like DNA and ENVX, I think you'll be happy that you bought it now, even though we've already seen the NVX go up almost 50% over it.
Well, so you're recommending those two stocks, and we do have a comment from Who Me in the chat, and they're saying, are there any non-tech names that look attractive? And so the line is blurry of what's tech and what's non-tech, and I guess every company is technically a tech stock if you think about it.
That's a good point. Yeah, we're going to I should add sector to the model portfolio. That's actually like a good that's a good thing. Yeah, Chipotle is something that we just put in, CMG. We just put that into our model portfolio, so that'll probably like there's probably time. I mean, CELH is something that we love and the app loves. And that's an energy drink. We definitely like that. MPWR, like this is another, like I say this all the time. I just put it in the model portfolio. And that's up 4.55% already today. And like, yeah, that's a monolithic power systems. It's in the NASDAQ. Power circuit, sorry. Monolithic power systems provides power circuits for systems found in cloud computing. Okay, so not I'm looking at one more that's done very well. Oh, here we go. Tidewater is one that, like, sorry, it's already up. I put it in the model portfolio and it's already up 30% since I put it on at 623. That's one that I think can keep on running. Ape, that's an event-driven trade. That's up 10% since I put it in the model portfolio, and I do think that will keep running. There you go. There's a bunch of non-tech.
That's an
There's a
interesting
bunch of
one.
non-tech.
What do you
Oh,
what do you see in Ape?
what?
What kind of event is coming up for Ape? That's AMC's like preferred shares or something,
So,
right?
so basically, there's a special situation where they're trying to do a merge, they're trying to do a conversion of those preferred shares into AMC. And right now, as of now, AMC is trading at 422, and Ape is trading at 188. If that conversion goes through, those stocks will converge in value, like 100%, maybe very quickly. So that's why we are actually short AMC and long Ape. But Ape is like, yeah, Ape is like, there is like no doubt some risk. If for whatever reason there's another hitch or whatever, but like if you hold on to it, like that conversion is inevitable. So you might take a short-term hit. There might be a better time to buy. But yeah, those are some really good non-tech names that I really like. I have to check. I want to check on one more. And I just want to check the Prospero signals actually before I re-endorse it. Because I don't believe it's tech. But I want to just, ooh, yeah. Looking great. I think it's not tech. FICO, which I thought was like I thought it was going to be like maybe, yeah. It's credit scoring services. Oh yeah, FICO. I was just like, oh, yeah. I was like, that was weird. I didn't know. I didn't realize it was Fair Isaac and Company. But yeah, FICO is one. It's in the S&P 500. Very, very good in our ratings. 79 upside breakout, 42 downside breakout, 90 profitability, 89 net option sentiment. Strong, very low short pressure, pretty good institutional flow for a company its size, 67, and still a 90. So a 90 profitability and a 58 growth. So yeah, that's a very high, 148 is a very high profitability plus growth. 148 is that's about what Nvidia has right now, which is one of the best. So yeah, I can actually just like take a look. I'll take a quick look. These are a few days old, but like, yeah, it's profitability plus growth with which Chipotle is very high in, by the way. Yeah, let's see. So FICO is the 23rd ranked profitability plus growth stock. So yeah, those are all good ones.
So this person, since you mentioned Chipotle, this person wants to know about Kava. But if you want to look up Kava and Prospero, maybe I'll say something while you're doing that or whatever. But you know how you always mention that like 130 of what is it, growth plus profitability or something like that? That's what
Yeah.
you look for. That made me think about it'd be really cool if people in Prospero could customize. You know how you give like the 10 signals? If they could customize the signals that they were looking for, and then it would cut down and only show you the stocks that meet the certain criteria you put for those 10 signals. So if you wanted to,
That's on our roadmap. Yeah, that's on our roadmap, but that's like, we're gonna do some other things first. We have some alert systems coming out that are more of our favorite alert specialized. Those are higher priority because we like to help people as much as possible. But that'll be that'll be down the road. I do not like. I'm looking at. Sorry, I was looking at Casa, not Kava.
So Prospero will work on an IPO stock like right away, or would it take a day, or would...
Yeah, it does. Like we have some workarounds. Oh, we don't have Kava in. I'll look to add it. Like I don't have any thoughts. I don't have any thoughts on. I don't do off the cuff thoughts on non-Prospero covered thoughts. It's very easy for me to do that. If I can see the Prospero ratings, but I'm not touching it otherwise. But I'll work on getting it added.
All right, awesome. All right, there's another person. I think this is the, if there's any more questions, I'll move on and we'll get them at the end. But he's asking, or she, is it a good idea to select a stock based on only in net social sentiment for very short term?
No, I would say no, not at all. Actually, I only really like social sentiment if it's got good net option sentiment too. I would say no matter how high the net social sentiment is, anything lower than 50 net option sentiment is a hard no. If it's getting closer to 60, above 60, like right now I added FSLR that was in the 60s, but that worked for me because net option sentiment was on the upswing. So that's the exception to the rule. Around 60, if net option sentiment is in a clear upward cycle, then you can do it on social sentiment. But we list the rules, and I could even place. I'm gonna pull it up just so people have it here. In our glossary help file, we actually explain how we calculate our picks, and like we don't even post anything in our picks, unless the upside breakout is higher than downside breakout. So basically, like even in our short-term picks, even if it has very high net social and net option sentiment, we still won't recommend it unless upside breakout is greater than downside breakout. So that's another pretty hard and fast rule for me. I won't go long anything unless upside breakout is higher than downside breakout, and I won't go short anything unless downside breakout is higher than upside breakout. And like the very easy way to understand why that is like, unless I see net options bets in the long-term options markets for a stock, I don't care how bullish it is in the short term, because it means that like even if it does go up, what some people know, some people don't, is like timing the market is the hardest thing and executing a trade. And that's what retail struggles with more than anything, trade execution. And so like my problem is like, if something's high in net social sentiment, high in net option sentiment, like, yeah, maybe you will catch it up, but will you know, like, will the bottom completely fall out of it before you've had a chance to exit? And like with all the payment for order flow stuff, even if you place the trade, like there's some bad news event or whatever, even if you place this trade at the same time as institutions, you'll be behind all of them. So like, that's why it's not even about like, will it go up? It might very well go up. It has net social sentiment. It's actually more about the exit.
Mm-hmm. All right, so I hope that answers your question. I don't know how to say your name, so I'm just not going to say it. But moving on, earnings season is about to begin. The end of this week is like it's starting before that, but bigger companies the end of this week. So, how do we feel about the earnings season as a whole for this upcoming month or so?
So yeah, we've talked about it a bit in the newsletter, which is essentially that in addition to like this growth, like part of like what we were talking about earlier with growth, which is just basically like, we do think people are just like, no, I'm not going to miss the big moves, so I'm going to get in. Also, I think tech AI, especially with that stuff, people are playing this as if there's going to be a pretty big like guidance move up. And another big sign of that is like we've already seen like, just like interim events where it's just like a press speaking or an investor presentation where companies are already raising their guidance before their conference calls. And that's also always a pretty big sign that more is to come during their like actual conference calls. And that's just because they want to help the stock in the short term. They want to trickle out, like they don't want to just be like, oh, we're raising our guidance like 30%. over the next year. They'd rather say like, oh, like we're raising it 15% now at this investor day and another 15%, your stock's just going to move better if that happens. So yeah, the way the market is behaving now, I expect in tech, in AI, in those kinds of things, we're going to see aggressive moves up in guidance.
That'll be
I
really
can't
cool.
really comment on the rest of the market, but like I would expect those earnings estimates to beat, a lot of them to beat, as well as just like raised guidance and the stock to do well on those earnings days.
So it seems like we've talked about tech like just so often on this program, and it's because it was starting from so low, and I guess it's just the whole environment that we find ourselves in. But do you think that's going to continue for the second half and even the beginning of next year? Or, well, it sounds like you're just bullish on tech for the foreseeable future.
I think whether it's like, tech is also growth. I would say I'm like more broadly, bullish on growth, and like growth, like most tech is growth, they're almost synonymous. Like, if you have good technology, like you're going to grow. Like actually, if you are in tech and you're not forecasted to grow a lot, that probably says your technology isn't good. Like the converse, I would say, is even more true. Like your tech isn't good if you're not forecasted to grow. It's pretty simple. Like because if you look at like even Meta, and it's 81 profitability, it still has 58 growth. Like Nvidia, 75 profitability, 74 growth. For solar, we like their tech too. Like 79 profitability, 73 growth. Like all of that. Those are examples of good tech companies that even if you are that mature and profitable, like you're still growing. So yeah, I would say it's more broadly growth than tech, but and that's the thing. It's just like if the market's healthy, like growth is what you want. Like growth stocks are what you want. Growth stocks always outperform non-growth stocks in bull markets. But as we saw in bear markets, they get hammered that much more. Profitability protects you in bear markets. And I would say like we're seeing people behave as if they're not that worried about another big hit to the market. And I think it would take some very surprising inflation data to like spoil this overall parade. We're going to get some up and downs. Like obviously we've talked about like SPY, like stocks in the S&P 500 to like maybe have like a rougher rest of the year in for them than the QQQ. But yeah, I think it would take some pretty horrible, it would take like China attacking Taiwan, like, some weird escalation in the Ukraine war, like talking about like, war events that could rain on this parade. And then other than that, it's pretty much just like very surprisingly high inflation. I think those are the things that we're kind of talking about as the main risk factors that could like spoil this growth parade. But even then, like that's what I'm saying, like spoil it a little bit. Like the reason people are aggressively going for growth is because like most bull markets, especially these days, last a very long time. So just like I don't really care if it takes another 30-40% hit when I can see like, like a stock like DNA at 10x, like even something like Tesla, like we could easily see it 2x in the next year. So yeah, it's just like, no, am I worried about a 30% loss when I'm confident in 100% gain? No, not really.
Well, Kathy Wood's out there somewhere rejoicing that you're saying this because she's had a rough go of it for the past year or so. And I just want to say, like, I want to be the guy everybody hates on the Fed, but Jerome Powell has navigated somehow through this mess of like an environment that he was given to, I mean, possibly escape a recession or, we didn't have one last year, whatever. But I feel like he's done
Technically, we're in a recession, but like, yeah.
But he's done
Yeah.
as good a job I feel like he possibly could have done so far. And yeah, do we have anything else we want to say? We have one more question before we go.
I think he has done a good job. Like, yeah, I think he's done a good, like, running the American economy. I mean, the thing about it, like, is just like, who runs the American economy? Wall Street.
Amy
Like,
Diamond.
yeah, they tell you what to do. Like, it's like, it's kind of hard to screw up like, because they're the same people that fund the political parties. Like Wall Street funds both parties like pretty holistically, and they, them along with healthcare and like some other industries are the only ones they're just like, we don't care who's in the office, it's going to be good for us. um so yeah, I would say that that's like the main thing, that it's just like, it's kind of hard, like, because Wall Street, I mean, they're also like, they run the economy largely, and I'm not saying that's a bad thing. Like, it is a bad thing when they're like doing things like deregulating derivatives like they've done in the past, or repealing Glass-Steagall, which is like one of the most idiotic moves. And like, for those of you that don't know it, Glass-Steagall was the law passed in the after the Great Depression, that stopped banks from betting personal deposits. And like, I actually always agree that it's too big to fail, because like, we can't be in a situation where people are going to lose their savings. But there was absolutely no reason to repeal Glass-Steagall. It seems like a really good thing to have investment banks not be able to bet people's personal funds. You can't tell me like a rational reason other than corruption, like, why that was repealed. And that's a perfect example. It was a bipartisan effort. Everybody loved repealing Glass-Steagall, and it made literally zero sense to anyone other than the banks that were gonna like be able to gamble a lot more and always get to be bailed out, who loved it. For everybody else, it was very stupid and annoying.
And that's something that everyday people probably don't even hear about or know about, which is crazy. But
Yeah.
so another question from Hugh Me, they're asking, how do you know when to exit a trade because they're up on Rivian and they're not sure if they should sell out or keep going?
So the short answer before I really look at the Rivian signals on Prospero is like, slowly take your profits, like, that's what I would say.
Right?
I
If
would
you're
say
keeping
just
profit.
like, yeah, like start selling your position as it goes up. I would sell, like, if you haven't already, if you're just holding the whole thing, I would say sell 30% today. Like, put it into something else that has a lot of growth opportunity. Like, I might, like, if I'm like feeling like I made a good amount of money like that, I like 87%, I might sell 50%. Like, why not? Like, put it into something. And like, especially like looking at Rivian, perfect example. Like, it's a 10 profitability, 81 growth, 32 upside breakout, 49 downside breakout. It's got that downside higher than upside. I would personally sell, like, if it was me, I would sell 50% today. Like, I don't like those long-term metrics. It still has like very high net option sentiment and high net social sentiment, 88 and 89. So that would be the thing keeping me. And that's actually a nice graph on it. That's the only reason I'm not saying sell more, because it does have some nice movement. Upside breakout going up, downside breakout going down, net option sentiment in a very nice upward graph. But yeah, I'd bail like on 50% today if it were me. And by the way, like, just the last thing, I gotta leave. I actually have a hard stop in a minute. But like, the funny thing I always hear when people say like not financial advice is like, securities laws apply to you no matter what disclaimer you've given. But like, the reason I say this is what I would do is you're allowed to say that. I'm not giving you advice. I'm saying what I would do. So like, if you ever want to actually like give advice without giving advice or without violating any securities laws, which everybody should care about, and a lot of the YouTubers doing the meme stocks did not, that's all you have to say. This is what I'm doing. This is what I would do. And then you're not giving any advice. You're simply saying like me. Sometimes I will go as far as to say if I were you, but that's as far as I'll go. But I have to go. I have to jump to another